We are talking pharmaceuticals on today's Equity.Guru investment roundtable. Rob Simpson with you. Chris Perry's over there. TK Indichen is over down there, and down below here in the basement is Vishal Vituri. Sorry about that, Vituri. Someday he'll make it back up here to the penthouse with us. But you're going to start us off because this is a company that's been busy as of late. They just had their little clinical trial on a pediatric hemophilia medicine that came out a couple weeks ago, or they finished their phase 4. And then 4 days after that, on August 16th, they announced their operational results and financials for the first quarter of fiscal 2022. But what does all that mean when you look at their stock price right now? What's going on?
So these guys are a rare disease pharmaceutical company. You can take a look at some of their products here. I mean, they have a lot dealing with autoimmune rare diseases and also allergies. This is the stock chart. I mean, there's a big drop here, and I did go back to the news to try to find out what happened here on July 30th, beginning of August. And it seems it had to do with this FDA here. They were basically putting out this drug, a new drug application, and there were some issues or it got rejected, and that drove the price down. I mean, it's falling. And then, as you said, clinical trials and earnings are now seeing a bit of a bump here. So after earnings, we saw about 4 or 5 days here of green. So, I mean, to dig into earnings, I think we'll have to go to TK here and see what he finds. Is this a good spot here to buy?
Awesome. Earnings, man. It's kind of a weird situation for them. I was talking to Assad last week, and for those who don't know him, he's recently married and a genius in the pharmaceutical space. So his life is well-rounded. But yeah, he was talking about a lot of funds rotating out of stocks.
Okay.
When it's not, and they do it because it's their mandate, and it has nothing to do a lot of the time with the company. And I think in this situation, it might be something like that happens, where if you look at analysts' expectations, I don't like looking at analysts' expectations because a lot of them just throw in numbers into a model. But they're kind of seeing revenue in 2022 being close to 98 million throughout the year. And 2023, it's close to 38 million compared to end of March, where they had $79 million in sales. So it's like the company seems to be doing well. It has had a hiccup here and there, especially because of a write-down from I'm going to butcher the name, Xfinity brand. They had to take some
It's Xfinity without the F.
Yeah, Xfinity without the F. And they had to take some write-downs there as well, which is a one-time hit, but Wall Street, the market doesn't like uncertainty.
Yeah.
And it's reflecting in its stock price. And I want to kind of focus on the cash buildup and something I thought might have caused more concern as well. And is probably where a lot of people have now speculated that their sales might not be as high quality as people were expecting at the beginning. So their cash pile has been building up, which is pretty normal for a company that should be generating cash and selling stock. Yeah. But at the same time, this accounting thing has been going on where they're building up their accounts receivable. So essentially in their books, they're now making more sales on credit, which can accelerate revenues in the short period. And a lot of people take that as a prediction that sales might decrease over time. And to compensate for that, they need to put in cash for the meanwhile. And if they're not raising stock, they would issue credit terms with their suppliers that are a little favorable. And you can look at accounts payable for that, and it's also increasing. And this can kind of seem like operational inefficiencies, but we also have to keep in mind it is a fast-growing company. So the volume it was doing before might not be the same that it could do today. And this growth in receivables is just their book of business growing with them. But I think a lot of people, when they see an increase in receivables over a short period of time, it's kind of a warning sign for a lot of analysts because they feel like the quality of the sales are not high. They're making these advanced sales that might not happen. It sounds illegal, but it's actually it's pretty legitimate. And I think that's another thing that might have happened. And to fund most of that, they've been using a lot of debt, so they've levered up as well. So I think their interest expenses went from close to $1 million a year to about $9 million last year, which is still reasonably small compared to their total sales, especially if they projected to make $98 million by the end of this year, by the end of next year. It's not too much of a concern, but just little movements like that in a financial model can affect a whole hedge fund strategy and how they play the stock, which is why I think it went down close to 45-50% in that period.
Yeah, I mean, it's a pretty big drop. I mean, like when you see something like this, in trading terms, it's like trying to catch a falling knife. So you tend to want to see some sort of basing before you even talk about it. But the thing is, I'm not a biotech expert. Esson is, and I remember Esson's the guy who told me to buy this company maybe a year ago. And it did quite well, and he still remains bullish. So if Esson's still bullish on this company and its future, he's the expert, and I would definitely take that into consideration.
True.
Chris Perry?
Yeah, look, the thing with biotech, and the thing that keeps a lot of people out of biotech investing is you don't get any news for a long time as companies are going through trials. They do their thing. It just sort of plugs away, and then one morning you wake up to a news release that says they got something wrong and half the stock is gone. The other option to that is that they didn't do anything wrong, and now you're looking at a 3x. Biotech moves happen quickly, and they happen hard. Anyone who's been sitting on this for 6 months waiting for the good news, they don't want to hear we've got another 6 months of trials. They're off to the next opportunity. So what you saw was a shedding of, ultimately about 2/3 of the value of this thing in the course of 3 weeks. Now that has stopped. And in the last couple of weeks, the company's gone from $260 to around $4, which, if you bought in on the dead cat bounce, that's a pretty good result. You're in a place where you're getting early stage returns on a company that is mature, that clearly stumbled. There's no question about it. Whenever the FDA says, sorry, not enough information here, you need to go back and try again, that's problematic. But it's only problematic in terms of timeline. This company now knows what it needs to do and is going to go do that thing. And in the meantime, they have a whole bunch of other stuff to rely on that will keep the doors open and keep things moving along. So I see the trading volume of the last month as having been a real opportunity. And people that decided, okay, the bottom has come now. This thing is at a place where it's too cheap. I'm buying it in numbers. The same number of people who jumped off the train are starting to jump on back the other way. So if you missed out a year ago when we were talking about this stock, or even earlier than a year ago, I think we've been at it for a couple of years. We were looking at it at about $3.50. It's been great value, and it flew up over the course of 6 months to $10. The fundamentals are still there, although the news release says, FDA rejects drug. You read into it, you find FDA has just said that they need to do more trials. It hasn't said this drug's gone, it's not usable, you've wasted your money. It said more information, please, which is a whole different news release. And probably if that had been the title of the news release, it wouldn't have gone from $7.50 down to $2.50. It would have gone from $7.50 to $5. Excuse me. So, if you want to look at it as vulturing in there when everyone else has lost their balls, I think that's the move. In FDA terms, there are a lot of people who'll jump off the train at the first shred of bad news. There's a lot of people who wait for that bad news and come in and buy cheap. And with Medexus right now, I'd be one of those guys.
All right, I was going to say we'll go around the horn, but Chris just answered the first question. The other guys, so you're going to jump in, hope for a little bump, and then maybe hold this for a while and see what happens?
Yeah, I look, it's this is play money at this point, right? Worst that happens is you're getting it cheaper than you were getting it 3 months ago, 6 months ago, when it seemed like a pretty good deal. If I get a second chance to make that rise that maybe I missed the first time around, sure, why not? Let's do it.
And I think there's like those two different opposing catalyst? Like, is it that fund that sold off 100% of their holdings of Medexus? And the NDA, the FDA saying, go back and do more trials, because that's technically another catalyst now, right? In the future, if that reverses, the market will like that. So I think there's some potential for this stock to regain its loss. I mean, there's a big gap here. Obviously, you can see between $7 and about $5.80 here, which in technical terms, if this gap fills, it's going to be super bullish. So I think a lot of traders or investors going forward are going to wait to see or hoping to see that this gap does fill, because if it does, the chances of hitting $10 again is very high.
TK, are you buying?
I think so. It's pretty rare to find a especially specialty pharmaceuticals that have, and I'm going to bore people again with this, a gross margin of on average for the last 5 years of 55%, essentially meaning they can sell on average from their portfolio of products at $10, and it'll only cost them $4.45 to actually produce the final good, pocketing $5.05, which is, I think it's pretty amazing for a company of its scale. And with analyst expectations, a lot of analysts cover the stock, so I know management does get bombarded with questions. I can assume somewhat they know exactly when some of the products are going to be coming in and when the sales are going to be finishing within the pipeline. I think it's a pretty strong buy at current price, if you're willing to take on that volatility for the next few months.
Biotech.
Well, I just want to go back to earlier comment from TK about our friend Ehsan when you said he just got married and he's a genius in the biotech sector. So does that mean the getting married part makes him more of a genius in biotech, or just makes him less of a genius overall? I'm just trying to figure out what the
I choose not to answer without a lawyer present.
I'll wait for his next call, because right now, most of his calls on all the biotechs he always recommends to me all hit. So
yeah,
he has a pretty good strike rate, especially in farmers.
Wait for the next one to see if he still has it.
So see if the marriage has changed anything. Well, I'll tell you what, the previous performance does not guarantee future results, people out there. So please do your own research, double check everything before you invest. But some good guidance here from the fellers. Those fellers being CP over there and VV down there, and way over there is TK Indochina. Thank you, gentlemen. We'll see you on the next session of the Equity. This has been Medexus Pharmaceuticals, by the way, and we'll see you on the next session of the Equity Guru Investor Roundtable.